What's up, guys? Today I'm going to be doing the mind-numbing work for you by reading you the summary prospectus for SCHD. This is a 4-page document updated on January 3rd, 2023, and before you invest in SCHD, you should definitely be doing your due diligence, and hopefully that's what landed you here. And part of that is probably reading the prospectus, but at least you should be reading the summary prospectus. And since you are watching YouTube, you probably don't want to read a 4-page document that's kind of bland to yourself. You'd rather have somebody read it to you. So before I do, I would super appreciate a like or a subscription. It really helps out the channel and it helps other people like you be able to find this content so they don't have to punch through this work by themselves. Also, when I'm reading, I do try and speak a little bit slower and as clearly as possible. So if the normal speed is a little bit too slow for you, go ahead and bump this up to 1.25 or even 1.5 to be able to get through the information a little bit quicker. Charles Schwab Asset Management. Summary Prospectus, January 3rd, 2023. Schwab US Dividend Equity ETF. Ticker symbol SCHD. Before you invest, you may want to review the fund's prospectus, which contains more information about the fund and its risks. You can find the fund's prospectus, Statement of Additional Information, SAI, reports to shareholders, and other information about the fund online at www.schwabassetmanagement.com/Schwab ETFs_prospectus. You can also obtain this information at no cost by calling 1-866-414-6349 or by sending an email request to orders@mysummaryprospectus.com. If you purchase or hold fund shares through a financial intermediary, the fund's prospectus, SAI, reports to shareholders and other information about the fund are available from your financial intermediary. The fund's prospectus and SAI, both dated December 19th, 2022, as supplemented, include a more detailed discussion of fund investment policies and the risks associated with various fund investments. The prospectus and SAI are incorporated by reference into the summary prospectus, making them legally a part of the summary prospectus. Investment objective. The fund's goal is to track as closely as possible, before fees and expenses, the total return of the Dow Jones U.S. Dividend 100 Index. Fund fees and expenses. This table describes the fees and expenses you may pay if you buy, hold, and sell shares of the fund. You may pay other fees, such as brokerage commissions and other fees to financial intermediaries, which are not reflected in the table and example below. Shareholder fees. Fees paid directly from your investment. None. Annual fund operating expenses. Expenses that you pay each year as a percentage of the value of your investment. Management fees. 0.06. Other expenses. None. Total annual fund operating expenses. 0.06. Example. This example is intended to help you compare the cost of investing in the fund with the cost of investing in other funds. The example assumes that you invest $10,000 in the fund for the time periods indicated and then sell all of your shares at the end of those time periods. The example also assumes that your investment has a 5% return each year and that the fund's operating expenses remain the same. Your actual costs may be higher or lower. Expenses on a $10,000 investment. Year 1, $6. Year 3, $19. Year 5, $34. Year 10, $77. Portfolio turnover. The fund pays transaction costs, such as commissions, when it buys and sells securities or turns over its portfolio. A higher portfolio turnover may indicate higher transaction costs and may result in higher taxes when fund shares are held in a taxable account. These costs, which are not reflected in the annual fund operating expenses or in the example, affect the fund's performance. During the most recent fiscal year, the fund's portfolio turnover rate was 14% of the average value of its portfolio. Principal investment strategies. To pursue its goal, the fund generally invests in stocks that are included in the Dow Jones U.S. Dividend 100 Index. Index ownership. Dow Jones is a registered trademark of Dow Jones Trademark Holdings LLC, Dow Jones. The Dow Jones U.S. Dividend 100 is a product of S&P Dow Jones Indices LLC and or its affiliates, and has been licensed for use by Charles Schwab Investment Management Inc., DBA, Schwab Asset Management. The Schwab U.S. Dividend Equity ETF is not sponsored, endorsed, sold, or promoted by S&P Dow Jones Indices LLC, Dow Jones, or any of their respective affiliates, and neither S&P Dow Jones Indices LLC, Dow Jones, nor any of their respective affiliates make any representation regarding the availability of investing in such product. End of footnote. The Dow Jones U.S. Dividend 100 Index is designed to measure the performance of high dividend yielding stocks issued by U.S. companies that have a record of consistently paying dividends, selected for fundamental strength relative to their peers, based on financial ratios. The 100 Component Index is a subset of the Dow Jones U.S. Broad Market Index, excluding real estate investment trusts, REITs, master limited partnerships, preferred stocks, and convertibles. It is a modified market capitalization weighted. All index-eligible stocks must have sustained at least 10 consecutive years of dividend payments, have a minimum float-adjusted market capitalization of $500 million US, and meet minimum liquidity criteria. The index components are then selected by evaluating the highest dividend-yielding stocks based on 4 fundamentals-based characteristics: cash flow to total debt, return on equity, dividend yield, and 5-year dividend growth rate. Stocks in the index are weighted based on a modified market capitalization approach. No single stock can represent more than 4% of the index, and no single sector, as defined by the index provider, can represent more than 25% of the index, as measured at the time of index construction, reconstitution, and rebalance. The index composition is reviewed annually and rebalanced quarterly. It is the fund's policy that under normal circumstances it will invest at least 90% of its net assets, including for this purpose any borrowings for investment purposes, in these stocks. The fund will notify its shareholders at least 60 days before changing this policy. The fund generally will seek to replicate the performance of the index by giving the same weight to a given stock as the index does. However, when the investment advisor believes it is appropriate to do so, such as to avoid purchasing odd lots, i.e., purchasing less than the usual number of shares traded for a security, for tax considerations, or to address liquidity considerations with respect to a stock, the investment advisor may cause the fund's weighting of a stock to be more or less than the index's weighting of the stock. The fund may sell securities that are represented in the index in anticipation or their removal from the index, or buy securities that are not yet represented in the index in anticipation of their addition to the index. Under normal circumstances, the fund may invest up to 10% of its net assets in securities not included in the index. The principal types of these investments include those that the investment advisor believes will help the fund track the index, such as investments in A, securities that are not represented in the index but the investment advisor anticipates will be added to the index or as necessary to reflect various corporate actions, such as mergers and spin-offs. B, other investment companies. And C, derivatives, principally future contracts. The fund may use futures contracts and other derivatives primarily to seek returns on the fund's otherwise uninvested cash assets to help it better track the index. The fund may also invest in cash and cash equivalents, including money market funds, and may lend its securities to minimize the difference in performance that naturally exists between an index fund and its corresponding index. The fund will concentrate its investments, i.e., hold 25% or more of its total assets in a particular industry, group of industries, or sector to approximately the same extent that the index is so concentrated. The investment advisor seeks to achieve over time a correlation between the fund's performance and that of the index, before fees and expenses, of 95% or better. However, there can be no guarantee that the fund will achieve a high degree of correlation with the index. A number of factors may affect the fund's ability to achieve a high correlation with the index, including transaction costs, asset valuations, corporate actions, such as mergers and spin-offs, timing variances, and differences between the fund's portfolio and the index resulting from legal restrictions, such as diversification requirements that apply to the fund but not to the index. Principal risks. The fund is subject to risks, any of which could cause an investor to lose money. The fund's principal risks include market risk. Financial markets rise and fall in response to a variety of factors, sometimes rapidly and unpredictably. Markets may be impacted by economic, political, regulatory, and other conditions, including economic sanctions and other government actions. In addition, the occurrence of global events such as war, terrorism, environmental disasters, natural disasters, and epidemics may also negatively affect the financial markets. As with any investment whose performance is tied to these markets, the value of an investment in the fund will fluctuate, which means that an investor could lose money over short or long periods. Equity risk. The prices of equity securities rise and fall daily. These price movements may result from factors affecting individual companies, industries, or the securities market as a whole. In addition, equity markets tend to move in cycles, which may cause stock prices to fall over short or extended periods of time. Investment style risk. The fund primarily invests in dividend-paying stocks. As a result, fund performance will correlate with the performance of the dividend-paying stock segment of the stock market, and the fund may underperform funds that do not limit their investments to dividend-paying stocks. If stocks held by the fund reduce or stop paying dividends, the fund's ability to generate income may be affected. The fund is an index fund. Therefore, the fund follows the securities included in the index during upturns as well as downturns. Because of its indexing strategy, the fund does not take steps to reduce market exposure or to lessen the effects of a declining market. In addition, because of the fund's expenses, the fund's performance may be below that of the index. Errors relating to the index may occur from time to time and may not be identified by the index provided for a period of time. In addition, market disruptions could cause delays in the index's rebalancing schedule. Such errors and/or market disruptions may result in losses for the fund. Market capitalization risk. Securities issued by companies of different market capitalizations tend to go in and out of favor based on market and economic conditions. During a period when securities of a particular market capitalization fall behind other types of investments, the fund's performance could be impacted. Large cap company risk. Large cap companies are generally more mature, and the securities issued by these companies may not be able to reach the same level of growth as the securities issued by small or mid cap companies. Mid cap company risk. Mid cap companies may be more vulnerable to adverse business or economic events than larger, more established companies, and the value of securities issued by these companies may move sharply. Small cap company risk. Securities issued by small cap companies may be riskier than those issued by larger companies, and their prices may move sharply, especially during market upturns and downturns. Tracking error risk. As an index fund, the fund seeks to track the performance of the index, although it may not be successful in doing so. The divergence between the performance of the fund and the index, positive or negative, is called tracking error. Tracking error can be caused by many factors, and it may be significant. Derivative risk. The fund's use of derivative instruments involves risks different from or possibly greater than the risks associated with investing directly in securities and other traditional investments. The fund's use of derivatives could reduce the fund's performance, increase its volatility, and cause the fund to lose more than the initial amount invested. In addition, investments in derivatives may involve leverage, which means a small percentage of assets invested in derivatives can have a disproportionately large impact on the fund. Liquidity risk. The fund may be unable to sell certain securities, such as illiquid securities, readily at a favorable time or price, or the fund may have to sell them at a loss. Securities lending risk. Securities lending involves the risk of loss of rights in or delay in recovery of the loaned securities if the borrower fails to return the security loaned or becomes insolvent. Concentration risk. To the extent that the fund's or the index's portfolio is concentrated in the securities of issuers in a particular market, industry, group of industries, sector, or asset classes, the fund may be adversely affected by the performance of those securities, may be subject to increased price volatility, and may be more vulnerable to adverse economic, market, political, or regulatory occurrences affecting the market, industry, group of industries, sector, or asset class. Market trading risk. Although fund shares are listed on national security exchanges, there can be no assurance that an active trading market for fund shares will develop or be maintained. If an active market is not maintained, investors may find it difficult to buy or sell fund shares. Shares of the fund may trade at prices other than NAV. Fund shares may be bought and sold in the secondary market at market prices. Although it is expected that the market price of the shares of the fund will approximate the fund's net asset value, NAV, there may be times when the market price and the NAV vary significantly. An investor may pay more than NAV when buying shares of the fund in the secondary market, and an investor may receive less than NAV when selling those shares in the secondary market. The market price of fund shares may deviate, sometimes significantly, from NAV during periods of market volatility or market disruption. For more information on the risks of investing in the fund, please see the Fund Details section in the prospectus. Performance. The bar chart below shows how the fund's investment results have varied from year to year, and the following table shows how the fund's average annual total returns for various periods compared to that of an index. This information provides some indication of the risks of investing in the fund. All figures assume distributions were reinvested. Keep in mind that future performance, both before and after taxes, may differ from past performance. For current performance information, please see www.schwabassetmanagement.com/schwab-etfs_prospectus. Annual total returns percentage as of 12/31. 2012, 11.40%. 2013, 32.9%. 2014, 11.66%. 2015, minus 0.21%. 2016, 16.25%. 2017, 20.88%. 2018, minus 5.46%. 2019, 27.28%. 2020, 15.11%. 2021, 29.78%. Best quarter, 17.11% Q4 2020. Worst quarter, minus 21.55% Q1 2020. Year-to-date performance before taxes as of 9/30/2022, minus 15.72%. Average total returns as of 12/31/21 before taxes. Year 1, 29.78%. Year 5, 16.79%. Year 10, 15.34%. After taxes on distributions, Year 1, 28.85%. Year 5, 15.92%. Year 10, 14.55%. After taxes on distributions and sale of shares, Year 1, 18.18%. Year 5, 13.35%. Year 10, 12.72%. Comparative index reflects no deduction for expenses or taxes. Dow Jones U.S. Dividend 100 Index. Year 1, 29.93%. Year 5, 16.9%. Year 10, 15.47%. The after-tax figures reflect the highest individual federal income tax rates in effect during the period and do not reflect the impact of state and local taxes. Your actual after-tax returns depend on your individual tax situation. In addition, after-tax returns are not relevant if you hold your fund shares through a tax-deferred arrangement, such as a 401k plan, an individual retirement account, IRA, or other tax-advantaged account. Investment advisor, Charles Schwab Investment Management, Inc., doing business as Schwab Asset Management. Portfolio managers, Christopher Bliss, CFA, Managing Director and Head of Passive Equity Strategies, is responsible for the day-to-day co-management of the fund. He has managed the fund since 2017. Jeremy Brown, Portfolio Manager, is responsible for the day-to-day co-management of the fund. He has managed the fund since 2018. Farian Juono, CFA, Senior Portfolio Manager, is responsible for the day-to-day co-management of the fund. He has managed the fund since 2011. Sabia Sinha, Portfolio Manager, is responsible for the day-to-day co-management of the fund. He has managed the fund since 2017. Agnes Zhao, CFA, Portfolio Manager, is responsible for the day-to-day co-management of the fund. She has managed the fund since 2022. Purchase and sale of fund shares. The fund issues and redeems shares at its NAV only in large blocks of shares, creation units. These transactions are usually in exchange for a basket of securities included in the index and/or an amount of cash. As a practical matter, only authorized participants purchase or redeem creation units. Individual shares may only be purchased and sold in the secondary market, i.e., on a national securities exchange, through a broker or dealer at market prices. Because fund shares trade at market prices rather than at NAV, fund shares may trade at a price greater than NAV, premium, or less than NAV, discount. When buying or selling shares in the secondary market, you may incur costs attributable to the difference between the highest price a buyer is willing to pay to purchase shares of the fund, bid, and the lowest price a seller is willing to accept for the shares of the fund, ask, the bid-ask spread. Recent information regarding the fund's NAV, market price, premiums and discounts, and bid-ask spreads is available at www.schwabassetmanagement.com. Tax information. Dividends and capital gains distributions received from the fund will generally be taxable as ordinary income or capital gains, unless you are investing through an IRA, 401k, or other tax-advantaged account, in which case you may be taxed later upon withdrawal of your investment from such account. Payments to financial intermediaries. If you purchase shares of the fund through a broker, dealer, or other financial intermediary such as a bank, the advisor and its related companies may pay the intermediary for the sale of fund shares and related services. These payments may create a conflict of interest by influencing the broker-dealer or other financial intermediary and your salesperson to recommend the fund over another investment. Ask your salesperson or visit your financial intermediary's website for more information. Alright guys, I hope that was helpful. If you would like me to read the full prospectus, go ahead and let me know in the comments down below. I'm happy to do that for us. And I'd also love to know where you landed. Did you end up investing in SCHD? Yes or no? Why or why not? Thanks again for watching. See ya!